So I'm going to go through some of the commodities, including natural gas and some of the metals. Let's start with natural gas, and really nothing's changed since the rollover this week on Wednesday. This is the daily chart. We've had 3 days holding up above that gap and sort of moving sideways, holding really strongly actually. So I suspect the next move will probably be up to the top of this channel. That would take us up to about $3.20 on natural gas. If we don't manage to get up there, then we'll probably have to fill this gap. A lot of questions about this saying, well, it's a rollover. It's not really a gap. It's the difference between the two contracts. Yeah, sure. Technically, it is a gap in the price, which means the price moved from one spot on the chart to another without any trading in between, any liquidity. So when that contract moved over, people got shunted into the next contract, or they eased into it depending on how the broker managed that process. But effectively what it means is not a lot of trading that went on, not a lot of volume that took place on this occasion. If we look back in the past, there is a lot of activity that's taken place during this period. So there's, residual volume, I suppose you could call it. Orders sitting in there, positions held from in these levels. So what it means is that we could probably move up to the top of this channel at about $3.20. I'm not sure if we're going to get into the $3.50 and above region until the end of the year. I know that sort of production and wells and all that sort of thing has dropped off a bit on natural gas, but we are entering the fall season and there's not really a lot of demand, and there are no real shocks to the system. Interestingly, even from the Ukraine situation, we've seen on the price of wheat that wheat has now fallen through the floor despite potential supply problems on wheat. We'll have a look at that chart just now. So what's going on in the Ukraine doesn't seem to be affecting things like, commodities like natural gas and wheat. So I think that we'll probably be bouncing around in this channel for some time to come. Eventually, I think we'll get up into the 350 to 375 region. But for now, we may touch the top of the channel. We may touch the bottom of the channel and even potentially lower. But you can see if we're looking at it from this view, we're right in the middle. And as a rule of thumb, when trading commodities particularly, we don't diddle in the middle. So I don't think it's a good reasonable bet to go long or to go short from this point. Let's see what happens. There's no rush to trade this. We've got plenty of time until the next rollover. Let's see how we go during this week. Any dips I'd like to buy, and any potential rallies up to the 320 level might be worth looking to sell. So let's keep an eye on that. We'll trade short from the top or long from the bottom somewhere, and we'll let this market develop going into this coming week. As we see other markets begin to move, like particularly the dollar, for example, we'll see how the dollar goes and the level of the dollar trading against other currencies, particularly things like the Japanese yen and the euro, affects the price of natural gas because of the LNG exports, about 10 to 12% from the US. Let's have a look at WTI. Well, we sold at $93 and the price has moved down from there, just coming down from the top of that channel. We did spike through it a little, frightened a few people probably who were looking to short. If we switch this to a weekly chart, you can see the $93 level on WTI is really critical, really important. We've got some previous lows here, multiple lows at that same price level going back into April 22, and then multiple attempts to get through there in October 22, November 22, and that's where we approached just now. We were bound to get a reaction from there. We did spike up through it a wee bit, up to about $94. I think there was a little bit higher than that in post-market trading, and then dropped back down, and we're now trading at around about $90. We've exited this short trade. I'm just waiting to see what happens. On the weekly chart, we do have a doji type candle. That's not a reversal candle, it's a hesitation candle. But if you look at this on a smaller time scale, you can see it's actually also an expanding or megaphone pattern, and that's a reversal pattern. So if I show you this on a 4-hour chart, and I'll draw this very roughly, you'll see this megaphone pattern on WTI, and that's a reversal pattern. So it looks good. Any spikes, any moves up to the top of this megaphone that would take us up to about $93, $94, $95 are good for an opportunity to try another short, moving back down to the bottom of this megaphone and probably this channel bottom. That would take us into the mid-80s on WTI, and I think that's the overall view. So for the short side, and for those going short, I think this looks pretty good. The fact that we've got a channel, we've got a spike high on the daily chart, we've got a megaphone formation, and we're selling at the top of this channel into this long-term resistance that we saw on the weekly chart at $93, all of those lows and those highs. So I think that all looks pretty good. I'm going to look at two other commodities on this page, and that's sugar and wheat. Now we're short on sugar, looking for a move down from where we've been, and I did put a little short video up on this on YouTube, which you can go and have a look at somewhere, the previous couple of videos, and you can see all of these reversal patterns. I did highlight these in that previous video, and I'll put a link to that video at the end so that you can have a look at sort of a more detailed analysis on this. But overall, we're short on sugar. I like the surrounding top We're aiming for the 200 period moving average on the day chart. That would take us down to about 23 cents per pound. And we've been selling up into this region at around 26.5 to 27.5 cents per pound. And that's the target we've got at around 23 cents. Not only is it the 200 period moving average, but it's also this previous low, it's the channel bottom, all roughly in the same sort of region. And it's this Fibonacci retracement level. So that's the deal on sugar. And the other one I must point out is wheat. And this has just fallen through the floor. Now, we got out of this wheat trade, I said at break even, it was for a very small profit, a few cents profit. And then on Friday, wheat just collapsed through the floor, along with a couple of other commodities like gold and silver, and a little bit on sugar, as you saw. But wheat was one of the big movers, and we fell through this floor here. Now, people are saying, well, where's wheat going? We've actually got a beautiful channel on wheat. This is on the wheat daily chart. You can see how wheat loves these double tops. There was a massive double top here, then a smaller one there, then quite a defined one quite recently, up to the top of this channel, and now we've just broken down through that very key support at about 575 cents per bushel. So the obvious target for wheat is the bottom of this channel. That would take us below 500 cents. That's about 490, so the bottom of this channel. And that's where we would expect wheat to aim for before perhaps looking for another bounce back off the bottom of this channel and a move up. At some stage, I suppose this price will need to move higher, but it's not now. If you look at the long-term weekly view, we're kind of in the middle of the overall long-term price. So this is not very low and it's not very high. In fact, these bands, these red bands where we're pricing at the moment, just fallen below there, kind of in the middle of the overall range going back 13 or 14 years. So we're not really cheap and we're not really expensive, kind of in the middle. And I expect that wheat now will move down to the bottom of this channel. There's potential and a possibility that we could get all the way back into this green band, and that's at around about 400 cents per bushel, all the way down here. And that's the sort of low zone, the bargain basement zone that we'd be looking to buy wheat into, and that's at around about the 400 cents level. You can see going back a very long time that that's a reasonable and sensible area. But wheat does sometimes get even cheaper. Of course, accounting for inflation, we expect it to be higher than sort of the level in 2000. But overall, I think the 400 cent level is pretty good if you're looking for a long-term buy. I'm not too sure if we're going to get down there. It's a possibility, but for sure, we're probably aiming for the bottom of this channel right now. Technically, this is about as good as it gets. And if that moves down there next week, for example, that would take us below 500 cents down to about 480, 490, maybe slightly lower, maybe about 470 to 475 before a renewed attempt to bounce off the bottom of that channel. So if you're looking to buy wheat, I think you're going to have to wait a little bit longer. So just to finish off commodities, I want to look at gold and silver. And we could look at platinum and copper and all the other ones as well. But perhaps let's have a look at just gold and silver, and then I'll quickly look at uranium as well. So this is the gold chart, and a lot of people are saying, well, this has collapsed, it's falling, it's going to zero. I don't think so. I think the overall picture for gold is still long, still bullish, and we've now moved back down into support. This black line, this moving average is the 100 period moving average, which we've just touched now. 100-week moving average. We've fallen back down to this red support line, which you can see goes back a pretty long time, about 3 or 4 years into late 2020 or even earlier than that. You can see it was an area of interest in 2011 as well. But this level here is a pretty key level. And overall, if you look at this chart, we're forming this sort of big bullish flag, really. Big, massive move up during the late 2019, 2020. And then the sideways flag, consolidation flag, with just one dip below it forming a sort of reversal pattern. When we got down to about 1620 to 1630, everyone thought gold was collapsing through the floor. That's when we were buying, in fact, and the gold has moved up nicely from there, formed this triple top, and just come back down into the support. Now that level is also where the 100-week moving average is. It's the 50% retracement level of the move up from 1630 or 1620 up to the recent high. So it's a beautiful 50% Fibonacci retracement level, and it's also pretty close to the bottom of this downward sloping channel on this weekly chart. And if we move down to the bottom of the channel, that would take us just another $10 lower, really, down to about 1835, maybe 1840. We're at 1848 now, so maybe down $10 or so down to the bottom of this channel before an expected bounce back up towards the top of the channel. That would take us back above 1900. On the day chart, you can see the same thing. There's that channel that we looked at on the weekly chart, moving down to the bottom of that channel. And there's the 50% Fibonacci level, this blue line or this blue level. That's where it starts. So it's a pretty good place for support. We must allow for a move down to this next pivot low and that's at the big round number 1800. That's this dip down here. And although I don't expect that's the most likely scenario, there's still a pretty good chance we need to test that 1800 level, which would take us down to almost the 61.8% Fibonacci retracement level. That's down here where this green level starts. So somewhere in this blue zone, I think we'll find support either at the top or in the middle where these lows are here, or at the bottom where the 618 fib is. So that's the overall outlook on gold. Same sort of thing on silver. We haven't been trading silver, but silver has now fallen down into the levels at which I've always liked a potential opportunity to buy. Let's switch to a day chart, and here you can see we're not getting a buy signal just yet, but this yellow zone is the zone where I think we'll find support at some stage on silver, somewhere between around about $23 and around about $21.50, somewhere in this yellow zone. The reason I've got this yellow zone drawn in here can be seen from the weekly chart. Previous resistance over here going back pretty long way, actually into 2015 or so, and then more recently around 2020, 21, 22, it's been the site or the zone for multiple bounces and spike wick lows into that level at around about 23.50 down to about 21.50, this yellow zone here, and we've just fallen down into there now. The fact that we've broken down through this channel here makes it a little bit concerning that this channel is in fact a bear flag rather than sort of an attempt at a rally, but bear flags only prove to be that if and when they're proven to be just that, and we begin to move lower below the bottom of the beginning of the flag, and that's a long way below us at about $17. Now this is a weekly chart, so this is a much bigger view of the overall thing, but I still think this yellow zone is the overall support zone. The reason I think that metals are generally bullish is because we're going to be entering a period of interest rate hike stalls, and at some stage we'll be moving into an interest rate reduction or a Fed pivot. Now I think that's only going to take place at the end of this year, but I do think we're going to be seeing weaker economic indicators. I think we're going to be seeing some concern, panic in the market, and I think overall metals, with central bank investment going into a lot of different metals, including copper, interestingly, as the China boom, which was off and then on again and then off, maybe seems to be back on again, and copper's showing a bit of a bid. So I think metals overall have got a good chance of rallying. Gold could get back up to the all-time highs, and silver has a good chance of finding support in this yellow zone. So even though I'm not trading silver, and it looked catastrophic on Friday, if we look at the 4-hour chart, look how it's fallen down and collapsed quite dramatically, quite suddenly. But when you look at the daily and the weekly chart, we've just fallen back into the support level. This is the daily chart, back into that yellow zone, and that's actually the zone that I prefer to buy into. So if we do see some reversals on 4-hour and daily chart candles on silver, we'll be looking to buy silver at some stage, perhaps down near the bottom of this yellow zone, which would be closer to $21.50 and potentially even $20 or 20.5, 20.8 to $21, somewhere around there. But in this zone here, this yellow zone, or slightly below it. So we'll be watching silver very closely. And as I've said, copper, I'm not going to expand all the rest of these charts. Copper found a bit of a bid down into the support zone, broken back above and held above its channel bottom. And we actually have 2 higher highs and 2 higher lows on the daily chart on copper. Same sort of thing on platinum. Bit of a bid there on Thursday, falling back a bit on Friday, but not too bad. And even palladium fell back a little bit on Friday, but had a good rally on Thursday. I want to look at uranium as the last metal that we want to look at. We've been buying uranium for a very long time now, but we sort of got out of uranium in this pink zone. It moved a little higher above this channel line, and then on Friday uranium also saw a bit of a pullback. I think we're seeing an oversubscribed market to the long side on both uranium and on gold, and often, funnily enough, they go together, not just because they're mined in the same sort of areas, but they tend often to trade in a similar fashion. But we've seen uranium pulling back quite sharply, and I think we could pull back all the way down to the bottom of this channel. This has been oversubscribed, overbought. There's been too much volume on this one-way bet on the side of uranium, similar, as I said, to gold perhaps, and I think both of these are actually bullish. I think uranium is going to move much higher, up into the $30 region at some stage, and I think gold's going to move up to its all-time highs, but I think they both need a bit of consolidation and a bit of pullback. I'll be looking to buy uranium back down near the bottom of this channel, and even better, with a bit of luck, we could get into some of these zones here, this green support level or this yellow support level, and we could get an opportunity to buy uranium closer to 20 rather than 23 or 24. I'm not going to be shorting this because I think overall the direction is long, but I'm certainly looking forward to being able to buy it at a better price. Okay, so that's all of the commodities. If you've enjoyed this, please give the video a thumbs up. I'm going to be doing another video on Forex and another one on stocks and so on a little bit later on today. So look out for those videos on this channel as well if you're trading those. But if you're just trading commodities and you enjoy this, please give it a thumbs up and subscribe to the channel if you enjoy this sort of thing. I'll see you in the next video.